Welcome aboard to our Trading Week Ahead broadcast for today, Saturday, March 13th, 2021. Good to see all of you here. Markets are still in an uptrend, as you can see it. We were in a downtrend for a few weeks there. Markets had pulled back off the earlier high. We took out new highs on Thursday, breaking that 39.50 for the first time ever. So the S&P joined the Dow in breaking out to new highs, and it'll be interesting to see where it goes from here, eh? Really good breakout pattern. We kind of zoom in on that. And see a little bit of trouble in paradise here. Not quite a shooting star because the upper tail isn't twice the height of the whole real body or whatever, but it's got a bearish potential. It's overall still an uptrend, but we do have a tail on the top. So what this means to me is we don't want to use a resistance area right at 39.50, which had been the resistance. We want to wait until it's right above that tail. So 39.70 or so would be R1. And I would use the 50 simple moving average of 38.50 as support one. So when we get out of it, at least I'll be getting out of equities and into my inverses if and only if we lose 38.50. I'll be scaling into my winning cannabis plays and others, Bitcoin and other sectors and oil and so forth, initiating new trades if we break 39.70. So that's the key support and resistance. The magic numbers, 39.70 is R1 and 38.50, the 50 SMA is support one. The VIX, what's going on with the VIX? Way down at under 21. That's the other key market internal to look at is our VIX, the volatility index. It is definitely oversold down, or not oversold, but overdone down here at 20 to 21. 22 is kind of the key support line, the key support region in the VIX. Chicago Board of Exchange Volatility Index going down is bullish for the market. So what we want to look for the VIX is just because the width of yesterday's move, let's use 23 as R1 and 20 as S1. R1 means resistance one, meaning we want to be cautious about equities and potentially get bearish if the VIX gets back over 23, and especially if it gets back up to 26, which could occur by midweek. If the VIX stays down here under 22, and especially if it gets down under 20, then we'll have a continuous rally mode market continuing up to new highs. Now in our current market, we've got lots of good charts. And one of the key sectors we want to focus on is oil. And one of the stocks that you may want to consider, we cover in the live room often, is Occidental Petroleum. Also the UCO oil ETF has been especially strong, right? Going all the way from 34 to 64. So I had been looking for potential reversal in oil back here, but abandoned that when the market took out pivot high on Thursday. So the way to play a pivot in oil would be with SCO. Which had tried to get a little bounce, which I bought, but then I stopped out. I think it was yesterday or Thursday on the drop here. But if crude goes down, this will bounce. If crude keeps going up, then obviously UCO and other oil sector instruments. Marathon's another oil service sector instrument that's been especially strong. So do pay attention to our oil sector. That's a hot sector right now. And if it reverses, that's the trick is, if it all stalls and drops, then what do? Well, you don't just sit on your hands and wait for a potential next breakout. You may want to play the short side with things like SCO. And DRIP is the other one, DRIP, as opposed to GUSH. Anyway, we take a look at some other hot charts. Look at a variety of charts. I started to get back in some of the cannabis instruments. Like Tilray, I think is a really good one. There's plenty of them to choose from. There's AFA, Afria, there's Sundial, there's the MJ ETF, there's Aurora Cannabis, ACB. But now is the time for the upcoming week ahead to consider scaling into cannabis, especially strong on Thursday. All right, this is Tilray. There must have been some good news Thursday afternoon because the entire cannabis sector blazed higher on Thursday afternoon. And you see the same breakout pattern on Thursday in cannabis. And this is a good kind of a lesson learned that you can use for any sector for the rest of your life as a trader, is when you see multiple instruments within the same industry group or the same sector spike up sharply on one day, odds are you won't have caught that breakout, but at least it should put it on your radar. So, you know, a high volume breakout like this, and I don't know if anybody of you are following the cannabis industry especially closely can tell me if you know what happened on Thursday, or somebody wants to look it up right now. I would appreciate that. But anyway, I think there's some, it looks like there's some news on Thursday because you have a big spike up in our cannabis sector instruments like Tilray, Canopy Growth, AFA, ACB, Aurora Cannabis, and others. So, but of these, the best instrument for active day and swing trading is Tilray. It's got the best point range. That's another thing you want to pay attention to. Also, if you're getting, you know, stopped out or you're not being successful in your trades, make sure you're focusing on those stock charts or ETF charts that have especially wide trading ranges. It makes it much easier trading. For example, this guy, the range on Thursday was 24.5 to 28.5, so that 4-point range. If you look at Canopy, on the other hand, it only had a range of 33 to 34, about a 1.5-point range. So although Canopy's a great company and a good, you know, swing trading stock as well, if you're doing day trades, you want charts instead like this that have bigger ranges, right? So that's one point. Also of interest in terms of hot stocks, our Bitcoin sector had been really good. I sold my EBON, made a nice profit in this thing. I'd been swing trading it. Remember I mentioned it to you folks last week or the week before. EBON, that's one that's relatively new to me. I'd only heard about it a few weeks ago. But it, along with Riot, you know, blockchain, and MARA are good Bitcoin plays. But anyway, I sold this on the pullback. The concept to teach is, I like to take the money and run. If you're swing trading, I mean, okay, I sold right here at 1040 yesterday. I'd been in from earlier on the initial breakout and I sold up here. Now, selling into strength, this is a kind of a concept. Concept of the week is, you know, don't look a gift horse in the mouth. If you have a swing trade and it runs up a few points all of a sudden on one day, take the money and run, or at least a big portion of it. I mean, now, will I be upset if this gaps up to 15 without me? I won't be upset because I made a good trade setup. I made money in this trade. And the concept is, if you're in a swing trade and you have a big gap in your favor that then starts to go back down, or it has an especially strong up day, that's usually a good time to, excuse me, book a profit, because so frequently, and you've seen this, I'm sure, is after a big day or a big gap, the next day often it fades back to the middle of the trading range, a mean reversion pivot back down to 9 or 9.5 or 8 or something. So for that reason, I sold my EBON yesterday. If you have a big multi-point run, and I was following it carefully. I trailed the stop on the way up, and once it hit 11, I said, okay, that's probably a bit extended. Let's tighten up stop. And I think I got hit right there. And that's a good example of a winning swing trade exit. And so that's a new concept I haven't covered before. But when you're exiting a trade successfully, of course, you want to take as much money out of it as you can. The point is, if you have a big gap in your favor or a big intraday run in an existing swing trade, take the money, right? Because your goal is to get paid. Show me the money. So anyway, that was a good exit call. I don't know if anyone else was trading this or some of the other Bitcoin stocks like Riot or Mara, all of which I've traded recently, and because they've run up so nicely. But this is a good example of a successful exit in a live chart. Other ones, what else? CAN has been spectacular for us yesterday. Look at that chart. CAN yesterday called along at 33.7 right here. And I had them sell at 34.8, and then we re-entered at 35.7 and sold right under the 38. So I had a couple of sequential entries, but the first one that I called for live room members yesterday was long right there. And that was because that's a bullish cup above the pre-market opening range. This is a pre-market, how to say, an in-market move based on a pre-market analysis. The opening range on this guy was way back here. So my live real-time call for my Trading the Open live room members, of course, you should be a member of Trading the Open. If you're not, why the heck not? My calls are legendary. I mean, look at those are the actual calls from yesterday. Virtually all made wins, right? I think we had a stop. I think, I'm trying to think, SLGG was a stop. I think it was long, call it 620, and it stopped out at 580. But the vast majority of them were winning calls. And this is a good example of one with an especially strong range. Now, the pattern that I want to teach you on this is what I call buying into previous strength. And that's why I always use a 2-day, 1-minute chart for at least for my own trades, because it helps me see the history, kind of like doing a background check on an employee or a spouse or whatever. You want to see what their history looks like. And yesterday's big run from 29 to 36 in CAN was spectacular. So I rightfully figured out, it's kind of like solving visual puzzles, right? And so I puzzled out this one. I said, okay, guys, let's go in somewhere over 33.5. Let's pull the trigger at 33.7. And boom, ba-da-dum-ba-dum, nailed it. And that was a good call. Yeah, that's why one reason why my live room is very popular is because I make so many winning calls. To be honest, that's the main reason. But I give specific entry triggers and also real-time exit calls. Now, does everyone see why, even though ultimately it kept going up, and it did make another 1 or 2 winning breakout calls on the upper part of the chart, but can everyone see why I said to sell live at 34.8? Right here. In at 33.7, out at 34.8, that's a $1 win. That is legendary. That is epic. That is great. If you get $1 wins in your day trades, you're a happy camper. And the reason is because it was getting right close to the pre-market high zone, right underneath that 35 here. I always like to buy right above the trigger point and then sell right under the nearest whole number. So for that reason, I called the exit here. Then I called the re-entry over, I think it was 35.40 or 35.70. And it ran on up another nice run up for us. And we called an exit right under 38. Anyway, that's CAN. And the chart pattern to validate that, again, if you're a day trader, you know from experience that if you try trading the horrible stocks under $10 that the morons trade, those are all pop and drop. You've got a video, kind of like video game hockeying in and out and blow up your trading account. That doesn't work. What you want is, if you want to become a more consistent trader, consider, just a thought here, consider trading charts that have more consistent buying pressure. Sorry, my voice is gone. I've been broadcasting a lot last week. I work really hard for my traders. And they're usually 8:30 till 11. Sometimes, I think yesterday we closed it right after 10:30, but usually I'm there 8:30 to 11. Anyway, if you want to get more consistent trades under your belt, you really want to focus on charts with more consistent pin action or more consistent breakout strength, like this guy. That's why we didn't wait for a breakout. I didn't call a long way the heck up here. That would have been stupid. I called a long right here, and that was smart. Now, we didn't get the exact bottom. I never get the exact bottom or the exact top, but I got a nice healthy chunk in the middle, and that's where I said to go long right there. And the reason was a bullish cup here in the pre-market, the trigger point right above the midpoint over 33.5 made sense. So that's CAN. Another good chart that one of my longtime smart members in the live room had mentioned was KOSS, and he brought that to my attention a couple days ago, and we called that long today again here at 28.7. So that's an obvious cup pattern breakout. For those of you who are new traders or not familiar with cups, it looks like this, like a coffee cup. It starts up here, it sells down like the letter U, comes back up to resistance, and my long trigger for my members is 28.7. Now live in real time, I called I won't say it's absolutely freaking brilliant, but pretty dang smart live exit call at 31.4. Sorry, my mouse is having a problem here. So the entry call was 28.7, and the exit was 31.4. So that's over 2.5 points of a run. Now this pattern, in addition to a cup, this is called an open range breakout. And you often see these occur during the first hour or so of the market. And when you start to see high volume breakout come in above resistance, which we did, if you look down at the bottom of the chart, you can see volume was picking up over 250,000 shares a minute. Booyah. So I called along at 280 or 28.7, and I said in real time, we sell it all if it gets under, when it was up at 30, right under 32, I said, sell it all if it gets back to 31.4. That's a good example of a winning round trip live call that my members got yesterday. It also makes sense for a chart to follow next week, by the way, which is why I mentioned that. So good charts. And another one that was at the top of the leaderboard yesterday was ENTX. This one I said to go long at 720. It got halted a couple times. I don't know if anyone else was trading ENTX, but it ran from 720 all the way up to the 10. And again, that's a good example of the concept I teach about selling right under decade values. Always sell nines, right? So whenever you run into something like 10 or 20 or 30, you always sell right underneath it because that's psychological resistance. People say, hey, it looks expensive up there. And for those of us who are professionals, we know that's an exit target. So as it gapped up after the third halt, it then halted 3 times all told on the way up. And after the third halt, where it opened at 10 and started to drop, I told everyone, let's sell right now at 970. It was over a $2.5 win, a live alert entries and exits. Now, do you think that's helpful? If you get live entries and live exit calls, because I think, it can make a big difference in your trades. Not like other live rooms where they just randomly talk about the day's gainers and leave people on their own to figure out how to trade it. That's not useful. One of the reasons my room has trained so many thousands of people the last 21 years is I'm very conscientious about giving traders the trading entries and live real-time exits in real time, updated throughout the morning. Of course, we have multiple entries. So often I give a trader second chance. If we call say pre-market, I called this long at 33.7. Later in the session, I called the secondary long up here, somewhere in this region. But anyway, being in the right neighborhood with the right charts and understanding how to enter and exit them correctly makes a big difference. What's up next? Here's one, NVFY. One of my traders had asked me about this. Oftentimes, we have such a good collaborative effort in the live room. That one ultimately gained. That one would be worth keeping on the radar for next week in case it does a bounce over 540. Right? It had come from 840. In general, I don't like these charts that are beaten down bouncers. I prefer charts that are taking out new 2-day highs like AFA and Tilray. Now Tilray I called along at 26.8 and it kind of bounced around in the morning session before finally running up as high as 29 in the afternoon. One of my favorite cannabis stocks, and this one was mentioned from one of my longtime traders as well, from Barry. This one, another good example of a high volatility chart. Now let's go back to our swing trading charts. We've got a few minutes left. Let's see what's hot. All the cannabis stocks are worth taking a look at for next week. Now, oil's been the obvious play, right? Things like Marathon, a nice big directional uptick in that one. Our UCO ETF and USO. So if you want to play oil, things like UCO are especially good because it's been a consistent runner. Occidental Petroleum, a little choppier, but still a good uptick for a swing trade, and Apache, probably the least favorable of the bunch. I mentioned GameStop to you guys last week, and I said it would be a good play on any breakout, and it did a mean reversion pullback. Went all the way from 60 to just under 200, back to 100, then back up to almost 300. So game on in GameStop. This would be a very risky instrument for swing trading, however, because the point range. So the way to trade that with less risk is to trade lighter share size. You know, I would not be doing 100 shares or 200 or 300 shares of this. Maybe just a few shares at a time, like I was back when it was near 60 a share earlier. Some charts are not suitable for swing trading, and this would be one of them because the risk is too high. You know, this thing could get easily back down to 40, 50 a share, or it could squeeze up to 400 a share. And it's just too, it's fine for intraday trades when there's a good 2-day high breakout in it, but not a good candidate chart for anything resembling a safe, intelligent swing trade. Metals like copper, Freeport's been up a little bit. Silver is trying to get a little bounce too. But overall, the two plays of the week are going to be things like your oil sector, like Occidental Petroleum and UCO, and also the cannabis sector, like Tilray, and Bitcoin, with things like EBON and Riot and Mara. Hey, thanks. Wow, big turnout. Let's see if any questions. Hey, Ahmed, good to see you, man. Strong sectors. Sectors have been kind of all over the place. Like I said, the strongest sector right now is oil. Second would be Bitcoin, and third would be a bounce in cannabis. So those are the three sectors, at least that I'm trading. And yeah, Felix, yeah, 3D had been up lately as well. One of my smart traders, Wendy, had mentioned this one weeks ago. And yeah, it looks like he's trying to bounce. Personally, again, not a trade recommendation, but because the 50 simple moving average is right near 34, I'd be looking for a breakout, say over 36 or so. You don't want to buy, how to say, when you look at a pivot play, and we do have a hammer down here, it did hammer out a low, even though it's a red hammer, the hammer's a hammer and supports at 22, and it breakout signals above that, which would be right over 26.50 or so. What you don't want to trade is the closing pocket or the closing space between current price action and one of the three major moving averages, which are the 50, the 100, and the 200. So for that reason, I would wait on 3D for breakout over 36. But yeah, that's a good play too. That's like the same category of the cannabis stocks, things that had been previously strong, then got beaten down and are now starting to bounce. The trick in trading those is you have to trade the ones, the biggest trading ranges that have the most consistent chart patterns. And yeah, that's a good chart. Hey, Trey, doing good. I know, Ed, we're looking at swing trades right now too. Hey, Harold. Yeah, good points. Oil may be overdone. I took an ill-fated shot at trying to play a bounce in SCO. That's the short crude oil instrument. The other one is called DRIP. It's kind of a sense of humor, the difference between DRIP, which is the inverse, the short crude. So if crude does drop, DRIP and SCO, especially SCO, makes good sense for a pivot play. And the reason I like that one is this is when crude started to go up. The inverse went down dramatically. Now I tried to play the little bounce here, but got stopped out right here, right? I always take stops on 2-day or 3-day lows, but I will buy this. I think I'm going to be a little more cautious this time. But if crude drops and SCO gets over 7, I'm going to start rebuilding a position because it's got lots of upside. It could easily double if crude drops. So that's my answer to, is crude overvalued? I have no idea. It could keep going up. But if the crowd thinks crude's overvalued, this guy's going to start to bounce. And so do you want to keep an eye on SCO? That's the inverse of UCO. Which on the 3-month you can see has been. That's another quick thing. It's a good idea to look at the 1 year, the 3-month, and the 6-month charts for swing trades. Personally, I prefer this one, the 3-month, the 90-day daily candlestick chart with 50, 100, and 200 simple moving average lines and volume. That's been my weapon of choice for decades now in swing trading today's instruments. Let's see, I don't trade Exxon or Bank of America, so thanks for asking about them, but those I don't trade. I'm gonna wrap up here in just a second. You can see the S&P's been climbing up. We have a little bearish tail up here, but it's still in an uptrend. So we have a long bias market taking out new highs on Thursday. We use 39.70 as resistance as R1 and 38.50, the 50 simple moving average line, as support one. Some of these momentum charts like CAN are especially strong, going from a base just a month or so ago of single digits, under $10 a share, now all the way up, making a shooting star pattern yesterday up near 30 a share. Let's do a quick, let's wrap up with a quick activity here. If you were long CAN on a swing trade, this is one I've been mentioning to my members this whole last week or so. If you're long, where would you stop out? Where would you trail a stop? Let's say you bought, say 26, 27. Where would you sell it all if it drops? Don't everybody post at once. Okay, 30, 30 and a half, 29, 28, 26. 26, no, that's too low. 31, 30, 29.4, 29, 30.5, 31. Okay, thanks. 28 and a half, 32, 33, 8, 31, 9, 31. Thanks, Shan, Philip, Mira, Trey, Steve, Sherry, Stephen. You guys are in the right neighborhood. 31, 30, 30. Any loss of the whole number right under support would be on this high volatility chart. Echo stop. Our time's up, friends. I appreciate it. But yeah, somewhere near 31, 30 makes sense for that. Just a reminder too, let's wrap up with a quick Reminder, I will be doing our day trading session with Steve Nissen, the first time we've done a webinar in a couple of years. We used to do them regularly, but in the last couple of years, not so much. So this one is a live day trading candlestick. For the first time ever, Steve and I are teaming up to do a live market session during real-time markets when we're looking at both, not just 5, but also 15 and maybe even 30-minute candlestick charts. In addition to time and sales and the 1-minute momentum plays that I use, I'll be working with Steve, and we'll be looking, excuse me, at both entries and exits. So do register your spot if you're not yet already in. It's at trademastery.com/day candles. More information on the page. Give the page a minute to load up because we have a lot of traffic on the site. And thanks to all of you who've been registering. I'll be sending your GoToWebinar links early next week. So anyways, best wishes for success in your trades. Play it smart, play it safe, and I'll see you guys next week. Bye for now.